Hi there, and welcome to the Global View on this Friday morning, the 8th of May. I'm Nadine Blaney. It's a pleasure to have you here with us. Now, let's set the scene for the local market today. Of course, it was a 1-2 punch for investors with uncertainty over U.S.-Iranian peace talks continuing and a pullback in chip stocks leading U.S. indices lower. So the Dow dropped by 0.63%, S&P 500 by 0.4%, and the Nasdaq was off by a more muted 0.1%. Chip supply worries sent shares of ARM Holdings tumbling. Intel and Advanced Micro Devices also gave back some of their previous gains. In earnings, Snap shares fell, the company blaming an ad revenue hit on the Mideast conflict. And cybersecurity firm Fortinet shares soared after hiking annual forecasts. McDonald's shares dipped even after a first quarter revenue and profit beat. Meanwhile, troubled private credit fund Blue Owl Capital slipped after a dividend cut. Tesla shares, though, rose after selling more cars in China. Oil had a very volatile session. We saw Chevron, Exxon, Occidental Petroleum, for example, shares hit as crude fell. So we'll watch what happens here locally with energy today. But gold miners were mixed. That's despite gold hitting a 2-week high. In economic news, the number of Americans filing jobless claims rose moderately last week, with the market trimming expectations for interest rate cuts this year. It comes ahead of the all-important non-farm payroll report that comes tonight. And it comes also as Federal Reserve Bank of Cleveland President Beth Hammack said that she expects the central bank to hold interest rates steady well into the future as the Fed navigates a climate of considerable uncertainty. Meanwhile, Fed Reserve Bank of New York President John Williams also spoke, and he said the demand for U.S. government debt remains robust despite high levels of borrowing. In fact, he called demand enormous, and that's a quote. The U.S. 10-year increased to 4.4%, roughly speaking. The U.S. dollar strengthened as the Middle East conflict kept investors on edge. Profit-taking pushed Bitcoin nearly 4% lower after the cryptocurrency gained about 12% in April. As I said, on again, off again, peace talks in the Middle East put pressure on oil. Oil really swinging between gains and losses after Saudi Arabia and Kuwait lifted restrictions on the use of its airspace and military bases, which the U.S. says could allow it to restart operations to escort commercial ships through the Strait of Hormuz as early as this week. Brent crude futures settled down 1.2%. Gold extended gains as mentioned, and it was up by 0.3%, I should say. Copper held steady, and iron ore gained for the 4th consecutive session on increased demand. As we begin today here in Australia, tensions in the Middle East remain elevated, with reports of the U.S. striking Iran in what they call self-defense strikes. Jesse Kuri from BCA Research joins me now. Jesse, welcome. What do you make of this latest development, and what do you think it will mean for markets?
Thank you for having me. So this had always been a pattern between the US and Iran in the past few weeks, especially after the ceasefire was initiated. And from both sides, there are different incentives. From the American side, the president wanted to have stability ahead of a very important election year. He wants to protect the strength of the economy. So the economy is still propelled by the tech boom. And he doesn't want, whether it's Iranian tension or whether it's trade war, to derail the still quite strong U.S. economy ahead of the midterm election. Whereas for the Iranians, they also know that the president is going to be the president of the United States is going to be quite sensitive to economic disruption. So they're trying to negotiate, and they're trying to keep a floor on oil prices to ensure that they can get their interest across to the United States.
Yeah, we get that, but I mean, when you see strikes on military bases in Iran coming from the U.S. today, I mean, what type of probability can you assign, if any, to a short-term peace deal being done?
So With regards to the strike, we also saw something similar this week where the Iran and the United States continue to exchange fire. So as early as Monday, when the United States announced that there was going to be an escort for commercial ships through the Strait of Hormuz, Iran attacked the U.S. and some of its allies. So the U.S. retaliated. But it also stressed that on Tuesday, after Monday, after the attack, the White House stressed, the Secretary of Defense stressed that this is not the end of the ceasefire. So that shows that the U.S. has a very, very clear interest to not want to derail the ceasefire. That's why we assign a probability that because there is quite a strong incentive from the American side to keep things stable. So that's why we assign a probability of 60% that there is going to be a short-term agreement between the US and Iran. And we also assign a 30% chance that this short-term agreement will not last beyond 12 months.
And that is because the impetus really, as you said earlier, is gaining some sort of stability ahead of the US midterm elections, because it's not just the US fighting on this front, it is the US fighting a trade war still with China and arguably with much of the rest of the world. So will some sort of a short-term band-aid on this Middle East problem, will it bring the type of stability in your view that the US president is seeking?
Yes, so he will attempt to bring some sort of stability ahead of the midterm, and not just from this Iranian conflict, but also from other conflict as well. For example, the trade war. We heard that he is going to meet with Chinese leadership, and we don't expect that on that front there's going to be escalation of the trade war with China and with other countries. Again, the same constraint binds on the president here, which is to he needs to stabilize the economy, or his party, the Republican Party, is going to be wiped out from Congress, and the Democrats could sweep Congress. So he needs stability, whether it's the trade war or the Iran war.
What happens though, Jesse, after this midterm election? Like, what is the impetus for the U.S. president to, to continue to seek this stability if, in fact, he does manage to maintain the Republicans' grip post-midterm election?
So after the midterm is going to be the danger zone when it comes to U.S. policy. So as I said, the midterm acts as a constraint on the president and also his party. But what happened if after the midterm, when there is no longer a constraint on the president? So there is still a constraint on the political party because they still want to be reelected in 2028, but there is no longer a constraint on President Trump because he is no longer on the ballot in 2028, and he is going to be engaging in legacy defining policy, and that could lead him to push for unconventional policy or aggressive policy because there is no longer a binding constraint on him. So that's why the midterm election, before the midterm election, he wants stability, but after there's no longer a midterm election, there is no longer an election for him, he could potentially pursue a very disruptive policy.
So what you're saying is any risk for markets doesn't necessarily wane or disappear after the midterm elections, because then we have an unconstrained president. So you've got to think that this is playing into Iran's, strategy, approach to this whole conflict.
Yeah, that's correct. So after the midterm, that's when we see the most risk because, again, there is no more constraint on the president. And Iran also knows that. So Iran has to calibrate its reaction today. So what Iran is trying to do is, because right now Iran seems to seems to be the one that has that does not have a constraint, whereas the president does, the United States does. So Iran will have an incentive right now before the president has no longer has a constraint. So right now, Iran wants to at least keep the oil price quite elevated, so that it can extract some sort of an economic gain from at least for now from this conflict. And it can also try to extract some sort of a concession from the U.S. while it still can, because it knows that the U.S. is restrained for the next 5 months.
Yeah. Well, fascinating dynamics, Jesse. Thanks for bringing us your thinking on this one. Jesse Curl from BCA Research joining us from Montreal. All right, just before we go, let's check in on where the market is expected to open here locally. And unfortunately, SPY futures pointing to a loss of 1.7%. That would essentially wipe out any gains that we have seen this week, and certainly those from yesterday. That does it for this edition of The Global View. We'll bring you across the open next.